Welcome to the Phoenix Prosperity Podcast, where wealth meets legacy. Join your host, Tim Fergestad, as we explore the journeys of Phoenix's finest to success and beyond.
Hello, this is Tim Fergestad. Thank you for joining us. I'm very pleased to have Christian Gabrielsson here with me today. Christian is a software engineer at American Express, and he's had a bit of a journey, and I'm eager to talk to him about it. Welcome to the show, Christian.
Thank you. Thank you very much.
Excellent. So before the show started, we were talking a little bit about making pivots, later in life, and that's kind of what I did. A quick reminder to our listeners that I have a PhD in neuroscience. That's what I used to do for a long time. My previous position was doing research in the genetics department at UW-Madison, and did that for a long time. And a lot of my skill sets did not translate into new fields. And so some things did, but a lot of things did not. Like doing electrophysiology or electron microscopy does not help me in my investments. And so I can empathize with Christian for making a pivot a little bit later. Christian, go ahead and talk about sort of your background, how you got to where you are now.
Yeah, for sure. So I'm actually originally from Sweden. I moved from Sweden to Canada, where I lived for like 10 years. Then in my early 20s, I moved to the US. And we actually me and my family, we had a business here in Phoenix. It was like a Swedish-Polish restaurant that we used to have. I did that for a few years until my late 20s. And then I decided to go back to school. And there's various reasons, mainly financial. And honestly, I really believe in sort of pursuing what you are passionate about, because that just helps making you good at something. And so I really wanted to go into IT.
Okay. Excellent.
Yep. And so I did that so I went to college for 4 years. I've been at Hawaii. I was at Hawaiian for over 4 years. I was a senior engineer there. Then I transitioned now into American Express, where I work for our research and development team within finance as a engineer.
Okay. Was there's a lot of risk and fear associated with making a transition like that?
Yes.
What was there an inciting incident or anything that got you uncomfortable enough to make a big change?
Yeah, for sure. So there's a couple of things. I used to be married in my early 20s. It didn't work out. And I think that was sort of like the catalyst of like me sort of just looking at life differently. And I said, you know what, I want to sort of pursue my own path in life. So I ended up going to school. I worked at State Farm selling insurance. And State Farm was great. They helped me pay for college. They had a really flexible schedule. We talked before the podcast about it just being really hard when you're an adult going back to college. And so I was very
working full time and being a full time student.
Yes, exactly. Yes. And so they had really flexible schedules. And so with their help, I was able to finish my degree and pursue what I'm really interested in.
Okay. Excellent. Yeah, trying to do night courses and stuff is not there's not a lot of options, right? You can't fulfill your requirements in a reasonable time frame, or in a normal time frame.
And I will sort of shout out here to Maricopa community colleges, because I truly think that the community college network in Maricopa is second to none in my experience. And like you said, they have flexible sort of night and daytime schedules. They really try to be as flexible as possible. Excellent. Sadly, with ASU, that was not the case. They were very sort of regimented. You know, most people were like in their early 20s, and that was their main selling market, so to speak. So that was a little harder. And so I had to make some sacrifices with work and all that good stuff. But yeah.
Okay. So let's take a snapshot of what you're doing right now.
Yes.
Tell us your role there, and if you're continuing to learn and grow and have further aspirations.
Yeah. So I currently work within American Express in our finance department. So our team is sort of like a cross-functional team. So we work within several teams and we make suggestions, architectural and other software design decisions for various teams. So we find efficiencies with various projects that they do, which is really, really neat. So it's sort of like a research and development. We'll come up with proof of concepts and we'll try out what works and what doesn't. Right now, we are American Express is obviously they have a credit card, they have their loyalty program, but they recently also have a bank. And that bank is doing really, really well. And so they're moving up with categorization from a category 3 to 2, which basically means there's just more assets in the bank. And then you fall into all kinds of regulations from the Federal Reserve. And so it involves a lot of like reporting and stuff. Something that most people are really bored about. I am actually really fascinated about finance since I've been early. Like I read The Wealth of Nations by Adam Smith when I was like 13 and and Das Kapital by Karl Marx and stuff. So I've Hank Paulson read his paper as well when he was Treasury Secretary and stuff. So I've been really interested in finance in general. So
sure, okay, yeah. That's very cool. Okay,
yeah.
And so, how long have you been with American Express?
So it's going to be my 3rd month. So it's been pretty recent.
Okay.
Yeah.
Okay. So yeah, so far so good, you said.
Yes.
Is there a lot of competition in that space, in finance, software engineering type space?
Yes. So as far as software engineering, it's actually a very interesting period of time with the rise of tools such as ChatGPT and Copilot and all these different sort of tools. I think they haven't really been adopted by the general population as much as they have within software engineering. And I think that we've seen sort of a shift where there's not a lot of opportunities right now, where it's shrinking, at least for junior developers, although that's sort of opening up now. And the concentration tends to be more for more experienced senior engineers. And so if you're in that spot where you have 4+ years of experience and you know your basic computer science, software engineering material, then I think it's fairly competitive. But then obviously the salaries are sort of equates to that competition. So they tend to pay fairly well. In my opinion.
I know a number of software engineers who, a number of them who were let go. They were senior software engineers with a lot of experience in the Bay Area, in Seattle and stuff, about a year ago, last summer. Can you speak to that market at all?
Yeah, I mean, similarly, I've had friends within just my community who've sort of been laid off, but they tend to, I mean, it's sort of very subjective, but I'm assuming they find jobs fairly quickly, right? I don't think they're out of markets too long, but I have no idea, honestly. Yeah. Fortunately for me, I haven't been laid off. So we'll see what happens in the future. But so far, I haven't been laid off myself.
Okay. Since you brought it up, can you speak to the use of AI for programming purposes? I know a lot of lay people like to dabble, but I don't know if it's really functional for professional level stuff.
Yeah. So I think you have sort of, since the invention of just computer science and computer languages in general, there's certain levels of abstractions you end up reaching. So it used to be a time where people, and I was in class and they showed it to me, where people were, they were literally typing into paper cards for zeros and ones. Then they started typing in machine code, and then they have compilers. And now, so there's different like levels of low level programming, higher levels programming. And when I think of AI tools, especially ChatGPT, Copilot, something that American Express, I think, more or less, there's beta programs, but fundamentally endorses, I think, from what I've seen within American Express and other companies as well. It's just being able to be just more efficient with your time. The sort of crudge work of making sure your tests pass for a given set of functions, all that can sort of be dumped into to artificial intelligence for it to do. And so I think I tell when I had interns last year and the year before, I tell them that when you're a software engineer, your primary sort of role is to problem solve, right? Using software as the tool to solve problems.
Okay.
And sort of AI is just a tool in the toolbox, so to speak.
Okay.
Yeah.
One thing I like to ask guests is, what is one of the biggest challenges you've had to overcome in your career? It can be your previous career, it could be anywhere along your professional journey, I suppose.
Yeah. I think like the biggest challenge is just knowing what you don't know. And I think we briefly talked about, you mentioned this before the podcast, about how in school, you can't cheat, you can't ask other people for answers, right? In business, and this is something I found out fairly early. When you don't know something, you need to you need to be really good at finding the resource to help you with the answer, because no one is going to handhold you. And the better you are at networking, the better you are at finding your resources, be it, documentation or people. Usually it's people that know what you don't know, so you can tap on their shoulder.
Yep.
That's a really good skill set to have, and something that I learned fairly late in my life, like in my 30s.
Okay. Thank you for that. Yes,
Yeah.
That's something for me too, right? I did not appreciate the importance of finding and utilizing resources to get things done.
Yeah.
So one of the things I like to talk about on the show is investing, and
Yes.
you've made some pivots in your career, and sometimes that sets people back for a little bit, but sometimes they still have like retirement accounts and other things they use.
Yeah.
Can you speak to some of your legacy plans and how you're trying to leverage your money, get it working for you to achieve your financial goals?
Yeah, so actually, I'm really passionate about this. So I consider myself a hobby investor, so to speak. So I read books. Most recently, I read The Psychology of Money, which was really good. The Index Card Investor, I think it's called, also an excellent book. But I strongly believe and again, to each situation is different. People have families, etc. But for me, 50% of my income, I tend to cap my income at 50%. So I have all kinds of tools that I utilize to do that. So on the work side, I cap out my 401k. And that's what I try to reduce my income, and whatever else is left over, I put into a brokerage account. I'm a big fan of index investing. So I invest most of my money. I don't own a house, I rent. And so most of my disposable income after I pay for my needs and my wants ends up going into this brokerage account where I just invest into this broad index fund. And I don't watch it. So I only watch it every month, right? Because the stock market, especially now close to the election, it goes up and down and depending on events. And so you just let it do its thing. And then, you sort of see the compounding interest later on.
Sure. That's one of the, speaking of books and market investing, there's a lot, but first of all, even the expert fund managers will tell you that you can't, beat the market without inside information generally. So it's generally yeah, sort of diversify and long-term sort of stuff. Don't be emotional, right? Like books like The
Yeah.
Intelligent Investor and so
Yeah.
forth. Sounds like
I
you're being very aggressive with it early on,
yeah.
which is great, right? A lot of people that one thing I like to also ask people the question is, what do you wish you would have known or sooner about building wealth and success in your career? And that almost everybody says, I wish I would have been more aggressive sooner.
Yes. So, and I tried to tell this. So my partner's sister, she's in her early 20s, and I opened a brokerage account for her when she turned 18. I was like, listen, here's like $500. I'm gonna put it in, and put in $10, $5, but trust me, you're going to buy it because you can't buy time. That's the only thing you can't buy, right? Like
Yep.
it go unless we invent a time machine, it just goes linear, right? Like
Yep.
there's no way. And so so I would say for me, there's a sense of, and there's definitely a tough period in my time where I was literally out of money, where I joined State Farm, and like my first paycheck was literally all the money I had in the bank. And I think that really taught me the value as a safety blanket of just having money set aside as assets.
Sure.
And that makes me risk averse. I know a lot of people have. You talked about real estate investments and how that can be a great investment, and I feel like I personally have this fear of just not investing. That's not investing in something that's not really broad. And so that's my safety blanket, is just investing in a broad, diverse set of assets.
Sure. There's a recent book out by a few people. Tony Robbins is one of the main authors on it, but it's the whole second half of the book is just asking. It's called The Holy Grail of Investing, but asking some of the most successful investors, what do they consider, the Holy Grail investment or portfolio? And they all talk about non-correlated diversification, right? And that's one of the downsides of the market right now is even an index. Everything's like an index fund because the market is so hyper correlated.
Yes.
Right? You can be commodities and gold changes and it change. It's just that everything is so so correlated. So it's they talk about the different asset classes they invest in and why and stuff so forth. So it's a very good read, particularly because things like one thing I like to point out is like the Yale endowment, right? They have like I don't remember 40 billion or something, and in the 90s they were mostly stocks and bonds. They were like 90% stocks and bonds, and then now it's flipped. Now they're 10% stocks and bonds, and like 90% is other assets, and including a lot of private equities, which private equity in businesses as well as like real estate. So those are some of their bigger what do you call it? Hedges, I guess. I don't know. They talk a lot about 7+ streams of income for their major sources for annual performance.
I do think that there is value in literally what you just said, where I think like the number one source of income for me is obviously my job. And we talked about just I don't know if my job will exist in 10 years. I don't know if I'm going to get laid off in a year. I have no idea to predict it. And so my sort of strategy is finding some sort of like non-correlative passive incomes that I could invest in. So I'm not so attached to my current job, right? That's really important. Just also for a sense of freedom as well, right?
Sure.
Yeah.
Sure. I have a number of clients and friends who had life events, right? They got laid off their job or other stuff, and it was their investments that provided passive income, that saved them, right? Without having to cash out retirement funds and other stuff, saved them from having to do that. And it depends on where you're at, right? So in your life, are you in growth phase or are you nearing retirement? You want more cash flow to replace your income. You transition more into cash flow. And those options are all out there, right? You can sort of gear your portfolio depending upon your goals, which is great.
Mm-hmm.
Well, I have reminder questions here, and one of them is just the question about what do you wish you would have known earlier in your career about building wealth and success. Usually start sooner and stuff. Is there anything in particular, maybe your career, if not investments?
Yeah, so I think one of my mistakes in my early 20s was probably I should have left the family business sooner than I did. And this is sort of something, generally with America, we're very entrepreneurial and all, and that's really great. That's wonderful. Um, but there's something to be said about also investing in your retirement, and I don't honestly know what that balance is, but I wouldn't presume to say to tell someone else because I honestly don't know. But I know for myself, if earlier on I was able to just get a job or maybe even a business that was doing better where I could invest in my retirement and in other passive investments, that would have probably been the better route for me. I feel like I'm playing catch up,
Sure.
but that's life. Like it just depends on where life throws you, I guess.
Yep, for sure. There's a lot of people who don't have a lot of retirement put aside.
Yeah.
I don't remember the statistics offhand, but it was a lot of baby boomers had most of their wealth in equity in their house. That was where most of their wealth is. And although the boomers have the majority of American wealth right now, it's the majority of it is in I think it was like 25% of the boomers or something. So there's like 75% of the boomers are not prepared for retirement.
And I wonder what happens in the future, because I am pessimistic as far as finances go, especially when it goes, and this obviously this relates to the American context, but you can also see that in developed countries all over the world, such as in Europe, where I don't personally think, unless there's going to be proper restructure of entitlements, that there's actually going to be entitlements for when I retire in 30 years, because you look at, and I think this doesn't get mentioned, especially during the election cycle, but we recently crossed into the barrier where we're paying more for interest for our debt than we pay our military. And then, that is really scary down the line, because what happens to entitlements? What happens to Social Security? So I sort of don't even plan for Social Security to be there. You know?
It's not a solid plan to just count on that.
Yeah.
Okay. So you bring up an interesting point. Like 100 years ago, people didn't really retire. Right. This is kind of a more modern invention. People would work as long as they could and then hope that someone could help them out when they could no longer participate and try to, pull their weight. And that's why people had big families and so forth. We're in a weird time now.
And even within with when the Social Security Act was passed, they had projections that people would only live 10 years past that retirement, right? And that was the calculations. People live well into their 80s now, and so it is really curious on like just retirement and what happens after retirement.
For sure. And our health costs have gone way up too, and trying to and assuming that's a right, which is interesting, right? That the modern generation feels that healthcare is a right for everyone is kind of interesting.
Yes.
Considering health insurance is not really insurance anymore; it's health care, right? Because insurance makes sense. Health insurance started kind of like car insurance for acute problems that showed up, not chronic, addressing long-term illnesses and disease. So it's a whole nother beast right now, and it's not cheap.
Yeah, it's definitely not cheap. It's crazy how much insurance, how much healthcare costs in general. I signed up for an FSA through my previous employer, and I don't know if you're familiar with like a flexible spendings account at all.
Yep.
So and this is something I learned, and I'll never make this mistake again. So that money is only is only available for like a given year, plus like a month afterwards. And then so that was one thing. And so I had a lot of money in there. And then like when I left my job, that I actually gave a donation to my employer because like I couldn't take it with me. And
Wow.
I should have read the fine print. It's not an
Right.
HSA.
HSAs are better for a lot of reasons, in my opinion.
Yes, and if I never in my mind would I because who would come up with a system like that? That doesn't even make any. You know what I mean?
Right.
And so I learned a $3,000 lesson this year about that. So
right. Yeah, HSA, you max it out. It's tax free. You can spend it in a lot of things, but you can also invest it yourself.
Mm-hmm.
You don't have to put it in whatever they provide. Same with like retirement funds. If you've it depends on who your administrator is on your or custodian for your retirement account for like a 401k through with a match or something through your business. Often they restrict it because it's usually like Vanguard or Fidelity, and they make you invest in their products. But there are some that allow you to invest, in other things, right? And allow you to direct it the way you want. And that's one of the things that I learned is their products don't give the best returns, right? And they'd have fees and other stuff. I much prefer doing self-directed IRAs. You can roll particularly if you had a job transition, you can then roll it over and you can self-direct it, right? I also have a solo 401k, but it has self-directed IRAs. You can direct that stuff into your own investments. There's restrictions, right? Particularly in real estate, you can't buy a house and live in it, or have your family, your friends live in it. But you can rent it out and do properties. I've done that, for example. But a lot of people are restricted to the options they think are there, and that's back to the HSA is another example of how you actually can direct that how you want and invest that pretty impressively sometimes.
Can I ask you a question about real estate? Okay,
Yep.
I'm really curious here. What is your opinion about sort of investing? And you mentioned this, investing in real estate. So I'll give you my opinion, which is obviously biased. Unless you have a lot of money, right, where you can diversify the spending, I don't think it's a good idea for people. I think like the mentality of like, oh, the American dream is to, buy a house, get that equity up, and that's sort of like your nest egg.
Right.
Strong. I sort of disagree with that viewpoint for many reasons, but primarily you're sort of putting all your eggs in one basket and you're hoping that house prices go up, which sometimes they do, but then obviously they don't, and it takes a lot longer for them to bounce back, right? So what's your opinion?
Well, I'll start with a story. When I first moved to Arizona in 2006, this is, before the great financial crisis and the housing bubble, I could tell it was cheaper to rent than buy, but I was sort of newer to the industry and I had experienced people tell me, oh, no, and convince me otherwise. And sure enough, I lost money on that because thankfully I sort of leveled up though. I lost money on that property, but then I bought a nicer property that was also kind of on sale. So it was a bit of a swap, a few years later, but I was right. And I feel the same thing right now. To your point, here's an example. We have one of our investments we're doing right now is a series of townhome build to rent communities. And we had an investor dinner in Scottsdale earlier this year or last winter. And we had the mayor there, the mayor of Phoenix there, Gallego, and she just showing their support for our product because it is affordable housing, right? Or it's workforce housing. It's $1,000 a month cheaper to rent our 3-bedroom, 2.5 bath, 2-car garage townhome than it is to buy a single family home with the same size with the mortgage rates. And you don't need $100,000 down payment. So yeah, it's called the affordability gap, right? It's just way cheaper to rent than to own right now. So in this market, yes, I think it's a better use of that's one of the principles of, if you've ever read Robert Kiyosaki's Rich Dad, Poor Dad book, your home is not an asset. It isn't making you money, right? Generally speaking. It has been for the past 10 years in a lot of markets, but that's not normal, right? If you're not renting it out, you're just trying to arbitrage what you would have been paying to rent somewhere else, and you just sort of do the math and see what was the best use of your money. There might be some tax advantages, right? There might be some appreciation. One of the best things you can do in terms of is what they now call house hacking. But for example, you buy a duplex and you live in one half and rent out the other half, and you can sort of fix it up yourself, right? If you're handsy or just hire some contractors and something, and so you can add value and get some asymmetric returns that way. You can sort of make the better returns that way, and so there's different ways of doing it that make it worthwhile. But if you just buy a house and now you just have bills and other stuff, there's a lot of people choosing not to do that right now. A lot of millennials. And in fact, they were just talking about boomers. A lot of them are retiring, selling their house, and deciding to rent in something smaller. It's more affordable because most of their equity or their net worth is wrapped up in the equity of their home. And rather than do a reverse mortgage, they'll just sell it and go rent somewhere. And then they have kind of a nest egg to live off of. So yeah, it depends on the market, depends on your goals, depends on where you are. But for somebody younger, if they're hungry and they want to do some real estate and they have an appetite for it, you could absolutely buy the ugliest property in the neighborhood and fix it up a little bit and then sell it and make money, right?
Yeah.
And on the first $500,000 in gains or whatever you get over the period, you don't have to pay tax on it, which is great because you were living in it, which is another benefit, right? So there are some perks to that. If you learn a little bit and do it, it can be still a very good investment. But generally speaking, your primary residence is not an asset, in my opinion.
Okay. So you more or less you fall in the same sort of opinion.
That said, I've made a lot of money on this house.
Yeah.
A lot of it's just the market appreciation, though. Right? I can't say that I'm like we bought this house because we wanted it, and this was like a decision for our quality of life. But it turns out it was a really good investment.
I mean, so there's something to be said about having a house. Obviously we're planning to have a family in the future. And so when you have a family, for your kids' sake, they sort of want like a more stable house where you're not moving and all this good stuff. And also like there's some good memories where, the kids have when they have the household and all that good stuff, memories. And so there's certain things that like are not like a finance decision, right? They're more sentimental.
Yes. Yep.
Yeah.
Yep. For sure. And I mean, some people want land in the yard to mow and and run around barefoot in the yard with the kids. Some people in Phoenix, it's mostly a desert scape. There's rock or something, and you can't really let your kids run around barefoot and spray them with the hose. It's not very easy. So it depends on what you want. My neighbors have horses, right? Depends on where you're at. I'd to the point again though, a lot of people right now are not eager to do landscaping or mow their yard. They don't want to have to replace water heaters or anything. They'd rather just rent. And so it's becoming, the demand is going up and up for a lot of reasons. That's another one of them. That's another reason why I love investing in residential rentals, right? Apartment communities and so forth.
How does one get into that? And what is sort of the price of admission for something like that?
Our standard investments are usually 506c investments, which mean the SEC. If you're letting people invest in your projects and they're not actively participating, if they are, then they could be a joint venture and we can partner on something. But usually when we're doing bigger projects, there's only a handful of experts on the team doing stuff, and everyone else is a passive investor, which then the SEC says they can't, they have to be sophisticated or have a certain net worth or be an accredited investor. And often the criteria for our deals is, because it's a 506c that I mentioned, the investors have to be accredited, which means their net worth has to be $1 million or more, excluding their primary residence, or their income has to be $200,000 a year or $300,000 a year, including their spouse or something like that, to be accredited. There's a few other ways to doing it, and they also or may change that and let people take a test or something. Do you know the basics of this type of investment? But then there's also another one we do. I had one this spring, an offering, which was, we call it the friends and family model. model because we have to have a pre-existing substantive relationship, right? So we talk a little bit more and I get a pretty good feeling for it and explain the deal to you and feel like you're pretty comfortable with it, then I can offer it to you. But I can't offer it, I can't do advertisements for it. I can't offer it to people who I don't understand their situation and so forth. So those deals we sometimes lower the minimum. So the minimum for a lot of our deals is $100,000 minimum investment. Sometimes we do 50. We actually have a debt fund investment right now, which is $25,000 is the minimum initial investment. And that's great because it's a good match for people who don't want their money tied up for a long time because it's liquid. There's no lockup period. A lot of debt funds do. So this basically gives a return. The fund has never lost. It's been had a loss. I mean, within the fund, it has over $1 billion assets under management. It's been running for over 10 years. It's it's performed. It's a rock star. It's been super stable, but it's basically like double a high yield savings account. So if you have money sitting around, it's a great place to put it. We can leave it in there to compound, or you can get monthly distributions off of it instead. There's no upside. It's just cash flow.
Interesting.
So a lot of our deals are a combination of that. When we flip an apartment community over a few years, there's a little bit of cash flow and it gets more and more as we renovate the units and improve it and get rents up. But then when we sell it, that's usually when there's a bigger return on capital. And normally in the market, you get 7-8%. You try to double your money in 10 years. We try to do that in half the time. We try to double money in 5 years or less.
Okay, so that's what that was going to be my follow-up question, what the rate of return is. So you're basically double is what you're aiming for.
Right. We shoot for like a 20% average annual rate of return.
Yeah. Well, that's great. There's an opportunity cost, of course, right? You're more engaged. There's, it seems like it's pretty sophisticated. There's a lot of rules and regulations and all that good stuff, but
And as I was saying before, most of these deals are not liquid, right? That's one of the costs or trade-offs for it is you cannot say, after like 7 months, I want my money back. Usually it's tied up in the investment until the deal is done, or we do a refinance or something, and maybe we implement the business plan, we renovate the units, we add value. Now the property's more valuable. We want to hold it for cash flow. We can do a refinance and give back the investor's capital and maybe some extra, or it depends on how the value of the property and how much we were able to refinance. But then there's another model, which I really like that I want to do more of, is called the perpetuity model, which is where you just hold the property long term. You have the opportunity for investors to get out when they want, but basically you just hold it. And when the market is good and over time, you do cash out refis periodically and it's tax free, right? And you just keep doing that. And every 5-7 years, when the market's up and the financing options are good, you just refinance again and give investors more profit, and they get it tax free because it's not a sale. There's nothing taxed. It's not a taxable event. And so just, so they get their money back, they can go reinvest it and do it again and do it again and do it again. So that's a great model. It's a lot of people they don't understand it, or they just don't like being in an investment that long. There's like, I don't want to be married to this investment for so long. So there are options where we can buy you out, right? We can say, okay, yeah, you can get out. It would have to make sure there's capital to people. There's secondary markets nowadays for that as well, that private equity goes, sure, we'll buy you out for a discount or something, right? For 80 cents on the dollar or something.
It's like a whole new world to me that I didn't know even existed.
Yeah, private equity or just private investments, in my experience, just outperform so well. So that's why you look at where the wealthy and the best investors invest, right? Success leaves clues. That's one of the
it's very, very true.
Right. Okay. Well, as we wrap up here, I want to ask if there's anything exciting on the horizon for the next 6 to 12 months for you.
Anything exciting? Well, so I like to travel quite a bit, and so this year I traveled to Mexico City. I went to Japan for like 2 weeks. I went to Canada. Wow. Yeah. So next year I'm planning to go to Europe, see my family. And I really like Japan. I don't know if you've ever been to Japan. Love Japan. Oh, okay, yeah. wonderful country. I'm planning to go. My partner, she's graduating this year or next year, and so as a graduation gift, we're gonna go to Japan. So that's sort of what I have on the horizon.
Very cool. Very cool. Yeah, I have to talk to some more about that.
Yeah, for sure.
Okay. Well, thank you, Christian, for your time today and for sharing some insights in software engineering field and investing. If people would like to connect with you, what should they do?
Yeah, for sure. So I think the best place for me is LinkedIn. So Christian Gabrielsson, LinkedIn is the best place to reach me. I don't do any sort of social media, so I don't have Facebook, Instagram, or anything like that. So LinkedIn it is.
Okay, excellent. All right. Well, thank you everybody for listening and watching. And thank you, Christian, for joining me today. We appreciate you sharing your story and your insights into success and impact in Phoenix. Thank you.
Thank you.
Inspired by our guests? Visit phoenixprosperitypodcast.com/guest and join us on the show and share your success story with Tim. The spotlight awaits.